Hey everybody, I hope you're doing great. We're going to dive into the world of tokenization and check out hot projects working on exactly that and more. If you're an XDC, XRP, Hedera, or Quant fan, you're watching the right video. We're going to dive into a couple awesome bullish articles from DNL News that reminds us that we're still early to the party, but it's getting ready to start. I do want to apologize, I've not been creating videos as much lately. I had a bit of a medical issue that popped up that I couldn't control, and other things going on top of that. So I had to take some time off. But with all that out of the way, let's get back to work and let's dive in. Now is the time to purchase that D'CENT hardware wallet. Through Token Topics affiliate links, you can receive an incredible discount. The purchasing links are in the description. If you're looking for a safe wallet to store your XRP, your Quant, your HBAR, XDC, and other great assets, look no further. Again, the purchasing links are in the description. Let's get back to work. Check out this big article, this bullish article from DL News. 4 ways JPMorgan, BlackRock, and others are targeting the $14 trillion tokenization opportunity. Tokenization is a big blockchain theme in 2024. JPMorgan, Goldman Sachs, HSBC, and BlackRock are just 4 financial giants vying for a slice of the $14 trillion opportunity. But how will they do it? Deloitte identifies 4 use cases for tokenization, and we're going to go through them in this article. Tokenization, or technology that pairs real-world assets with digital tokens on blockchain, will likely take years to develop, according to Deloitte. And any significant breakthroughs are likely to come from multiple parties instead of deriving from a single entity. However, ongoing trials with the technology and the emergence of regulations are promising signs. The report highlights how tokenization has become a big theme in 2024, with BlackRock and Franklin Templeton pushing further into the space. Research from Bernstein recently suggested that it would be one of the key drivers behind the cryptosphere rally over the next year. That's big right there. No wonder consultant Oliver Wyman estimates that tokenization of assets could top $14 trillion by 2030. That's no small number. Deloitte identified 4 near-term opportunities for tokenization use cases that could provide value for the early adopters over the next few years. Now, if you're holding utility tokens, this is very, very bullish indeed. Let's go through it. Here we go. Bond issuance. Issuing bonds as tokenized assets via blockchain protocols carries the advantage of improved transparency and faster settlement times, Deloitte wrote. As secondary markets develop, tokenized bonds could also help improve liquidity and accessibility. The European Investment Bank issued tokenized bonds using platforms provided by banks, including HSBC and Goldman Sachs, Deloitte said. More opportunities are sure to be found in the field of fixed income. Intraday repo transactions. Repo transactions involve selling securities with an agreement to repurchase them at a higher price on a later date, typically used for short-term financing. The accounting giant pointed to JPMorgan's $300 billion in intraday repo transactions via assets tokenization platform Onyx as evidence of early success. It also highlighted as early adopters Goldman Sachs, Singapore's DBS Bank, and Broadridge's distributive ledger repo platform. The latter captures some $1 trillion in monthly volume. Exchange-traded products. Tokenizing exchange-traded funds offers faster settlement times, greater efficiencies for issuers, with improved transparency and broader access for traditional investors. In DeFi, some firms have launched tokens on permissionless blockchains that track ETFs, while major ETF issuers, including State Street, plan to explore tokenization of their funds for stocks and bonds. Commodities is another one. Commodities, startups have issued more than $1 billion in tokens that represent ownership in physical gold and traditional commodities. Traders are following suit. Meanwhile, a Santander bank pilot issued loans to Argentinian farmers that were collateralized with tokenized commodities, including soybeans, corn, and wheat. Other possibilities will probably soon emerge with mutual funds, private equity, cross-border payments, and cash deposits, Deloitte stated. Now, the projects that are talked about on this channel heavily are involved in tokenization of real-world assets and cross-border payments. Here's another very bullish article that I'm going to dive into from DLN News. How tokenization can unlock 19 trillion in dormant collateral. This is a giant that's sleeping. And remember, it's about interoperability. It's not going to be one blockchain, but we're seeing major blockchains that are going to be part of this new financial system. For example, we know that Securitize is working with the XDC Network, which is working with BlackRock, but it doesn't just stop there. Interoperability is key. We know that what R3 is doing. We know what Hyperledger is doing. We know what Stellar is doing, what they're doing with IBM and Stronghold. And all this is working together if people are paying attention. They're seeing that this is all working together, even with Quant's Overledger. And it's going to shock people. And people are going to be missing out. A lot of people that were investing into the meme coins, like the Shiba Inus, the Pepe coin, although you can make a lot of money in the short term, these are the ones that are going to catch people off guard. These are the ones that are going to rocket when nobody was expecting. Analysts say banks post too much collateral to satisfy regulators. And tokenization of financial instruments could free this locked up liquidity, regulators said during an event hosted by DL News. So Bitcoin's spot traded exchange fund have seen billions of dollars in inflows since they launched in January. But this is bullish right here. As BlackRock CEO Larry Fink believes that's just the beginning for digital assets, foray into the world of high finance. The ultimate goal for Wall Street is the tokenization of every financial asset. Fink is not alone. Governments are also beginning to explore how blockchain tech offers high finance an opportunity to tap into new efficiencies. Tokenization, trading financial instruments on a blockchain shared by investment banks and their clients, could unlock trillions in capital that's just sitting there not used. Peter Kirsten, an advisor of the European Commission, said during an event in Brussels hosted by DL News. Kirsten cited figures from an industry report from Global Financial Markets Association that evaluated the potential and risks of distributed ledger technology on financial markets. The May 2023 report found that as much as $19 trillion of collateral is currently outstanding across short-term loans and investment banks make with one another. Even for us regulators, that's big money. That's a big amount, Kirsten said during an inaugural DL News event. The future of crypto in Europe. This part is super bullish. Robert Kopich, Secretary General of Blockchain for Europe, agreed. This is a giant that's sleeping. It just needs to be unleashed, Kopich said. And I totally agree that this is the next big thing in financial services. So anybody that's invested right now, congratulations, you are early and the party is just starting. So how would tokenization help? Global investment banks do a lot of short-term borrowing with one another to fund their trading activities. Breaking it down. These loans are often unsecured, so these banks must also prove to regulators that they hold enough high-quality assets to pay out if something goes wrong. Banks don't like holding on to these assets, as it represents an opportunity cost. They could be putting them to work and making revenue off of them. Tokenization proponents say digitized versions of these high-quality assets could automate the process by which investment banks post collateral, making it faster and more capital efficient. That could free up billions annually and to redeploy in general returns, according to the report. If you tokenize assets and you have those tokenizations on blockchains, you could release $100 billion in liquidity yearly. So is the traditional financial industry going to move into crypto? He states they are crypto and tokenized assets. Tokenized collateral is not yet being done at scale, but Wall Street is increasingly testing the concept. JPMorgan's blockchain platform Onyx, for instance, allows users to complete short-term lending transactions in minutes using smart contracts to tokenize cash and collateral. So we are in the very early stages, and this is all going to continue to grow and evolve, and we're going to see a lot of these blockchains that are specializing in real-world assets that are following compliance, following regulation. They are going to shine. They're going to be the cream of the crop. The XDC network is truly one of those layer 1 blockchains that is going to revolutionize the tokenization of real-world assets. Check this out from XDC Foundation. RWA tokenization and solutions from long-standing high liquid U.S. Treasuries to previously less accessible trade finance assets. Real-world assets, or RWAs, have arrived in tokenized form on the XDC network. RWAs are becoming more accessible via blockchain technology and shaping the direction of the industry. There is a wide range of applications for RWAs, including U.S. Treasuries, trade finance, real estate, and anything where ownership of tangible items can be represented digitally on-chain. HBARs have existed in the blockchain space for several years, serving as digital representations of off-chain assets. The effort to tokenize has recently gained traction with more traditional asset classes. RWAs have become a catalyst for network usage and digital asset adoption throughout all of blockchain technology. They create a gateway and critical link between traditional finance and blockchain technology. Here's some different examples. U.S. tokenized treasuries, for example. Tokenized U.S. treasuries represent a straightforward way to intersect traditional finance and digital assets, typically backed by an exchange-traded fund or ETF with a large brokerage house. These RWAs are secured by U.S. treasuries and the ETF that backs the RWA token. XDC Network's host of USTY token that is secured by BlackRock managed U.S. Treasury ETF, as we were just going over BlackRock, for example, earlier. Tokenized private credit. Tokenization of private loans to businesses have been around since the late 2020s and has seen some fluctuations in active loan values, rising to as high as $1.5 billion in June 2022. There are many sectors of loans, including real estate, auto, carbon, consumer, and fintech, and average APR hovers around 9.5%. Here's an example of on-chain credit with the XRP Ledger. Let's check out what the XRP Ledger is up to. So XRP Ledger native lending protocol empowering on-chain credit origination. It's a new proposal, and it's set to introduce a groundbreaking XRP Ledger native lending protocol that is designed to revolutionize how lending occurs on the blockchain. This represents a key advancement as we progressively redefine and develop this innovative lending solution on the XRP Ledger. The proposal lays the groundwork for implementing a robust decentralized lending protocol directly on the ledger. It introduces mechanisms for fixed-term interest-securing loans pulled from collective funds without requiring on-chain collateral. This approach relies on off-chain underwriting and risk management, and coupled with first-of-loss capital protection scheme to secure the protocol. Proposal highlights is simplicity and direct lending. At its core, the protocol enables straightforward lending with terms directly agreed upon by the borrower and the delegated manager of the lending pool. The protocol native approach, unlike traditional lending protocols in DeFi, which are smart contracts that execute in a virtual machine, XRP Ledger's lending protocol is integrated directly at the ledger's consensus layer and protocol level. Modular and flexible design with an eye towards future expansion. The protocol is built to be both upgradable and adaptable. So this is just an example of what's going on with the XRP Ledger as far as on-chain credit. Now let's check out tokenization with Quant. Just one area of tokenization is with deposits, bank deposits, and liabilities. So check out Overledger, programmable payments, how the tokenization of bank deposits and liabilities will power a new type of money. Many financial institutions are aware of the opportunity that digital currencies represent, but are struggling with their strategy. The momentum will be unleashed once the various experiments start to interoperate and bring live CBDCs. So you see that? That gives us an idea of the turning point. The momentum will be unleashed once the various experiments start to interoperate and bring live CBDCs and tokenized deposits together. So that is going to be an exciting time. So again, we are here early, and if you're holding, congratulations. It continues that when they start to connect, that will change the payments landscape. Let's also not forget Hedera Hashgraph, which I'm going to be talking more about on this channel. The multi-trillion-dollar credit union industry is primed for disruption with blockchain and DLT. With their DeFi Federal Credit Union, Bank Social stands at the forefront of this transformation, bringing the power of Web3 to credit unions and their offerings, built on Hedera. Well, everyone, I hope you enjoyed the video. If you did, please do consider subscribing so you can stay up to date with future content. Thank you.